Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research with Arca. For those of you joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our market research and based on our market research and Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Wow, guys. Well, we've been off the last 2 weeks, and I definitely chose an interesting time period to take those 2 weeks off. It has been nonstop volatility over here. For those of you that missed it, I hope not, but we've got the tariff war continuing between the US, Mexico, China, Canada, I guess every other country. And that has been really roiling global markets. The S&P had like one of its worst drawdowns on Monday. That has just further exacerbated the crypto sell-off that started in February. And so here we are. But most markets are down, so I guess that's the good news. The big news though in the last few weeks, if you haven't been around, the OCC has officially reversed its stance on basically being anti-crypto and unbanking crypto companies, which is great for the industry. We've had the establishment of a strategic Bitcoin reserve, although there will not be any immediate buying pressure. Still amazing. And then we've had a crypto working group that launched and announced on Friday that they're going to be trying to really do a lot to help the industry forward. Probably, though, it's going to be starting with stablecoins. So we're really excited for all these things, but nothing immediately impactful. Like I said, though, the market has really been seeing red despite this. And as you'll see, we're going to talk about some things here, but the market has not been so favorable. For those of you that are watching, ETH is now below $2,000, or it's about $1,900, and Bitcoin has been floating anywhere from like 79 to 84,000 in the last couple days. So we shall get into it. As always, I've got some tokens for you. So first, we're going to talk about Arc, or AI Rig Complex for short, if you're not familiar with it. So this is an AI agent framework. I've talked about it before. It's built on the Rust programming language, which is kind of technically supposedly easier for developers to use and plug into. So Arc this last week released their white paper, which actually outlines the future growth, outlining its kind of future growth plans and roadmap. So specifically, though, it talked about what they're going to be creating next, which is an agentic app store. And the idea is that they're going to be creating this app store where you can connect your AI agent to thousands of digital services. So you might be wondering, what does all this fluff mean? So actually in practice, though, the way that AI agents work right now is that when you create one, it's usually kind of just sitting in a vacuum. It can only do like a couple things. You go to ChatGPT, you type into the box, and you get answers from it, right? Or maybe it can search the web for you. But you can't tell ChatGPT, hey, I want you to go pay my utility bill online. Or I want you to go buy crypto for me. But to do that, it needs to plug into other services. And that's kind of how we would get to a space where agents can be even more useful in daily life. So the cool thing about what they've done is they're essentially creating this platform where an AI agent can tap into any digital service. So some of the ones they listed, for example, are things like Slack, like you use every day at work, or Stripe. Again, that you probably don't realize you're using most of the time when you're paying small business merchants. And so basically it's kind of essential to just, if you want an agent to do a real world task in a more complex way, you need to be able to plug into those services. So that is what the Agentic App Store is going to create. So this is really cool. As we've kind of talked about, we definitely believe that the future for AI times crypto agents is going to be, the ability for agents to use crypto as their preferred currency and their preferred payment rails. So we will see as this goes. The cool thing, though, about this also is that this is going to directly help the ARC token. To access that interface, you're going to use ARC's token. You're going to pay for the services. 85% of the transactions are going to go to the service providers paying them, 10% to the ARC treasury, and 5% to operations. Despite this positive development, though, ARC actually sold off on the news, and it ends the week down 57%. All right, next up, I'm going to talk about Ethereum. Have not talked about this guy in a while. There's obviously been a lot going on with them, so I'll dive right in. But last week, Ethereum, which is, if you're new to crypto, the largest smart contract platform, it delayed its Petra upgrade due to issues on the testnet. So a little rewind, if you're not familiar with how crypto works, you might be saying, wow, why is it such a big deal that they're putting out an upgrade and it's bumping into trouble? Ethereum is very, very, very decentralized. It was launched 2016, 2015, and it doesn't have governance or any kind of governance features built into its code base. And so in order to actually get development work done on Ethereum, it's on a very decentralized manner. They have basically monthly developer calls where people who just choose to contribute to Ethereum or work for the Ethereum Foundation basically join and say, yeah, I would like to propose this and we should do this. And then they have a set of proposals that they work on and then go towards, and then once in a while they do an upgrade as a hard fork, essentially, because that's how you upgrade crypto-based systems. And they basically just have to choose if they're going to accept those changes or not. And so it's actually really technically complex and a bit more high stakes just because of how big Ethereum is and how much value it is controlling or capturing. So this is kind of a big deal that they had this upgrade. The last upgrade was 2024, and I think it was a little bit more minor than this. The last really large upgrade was 2023. So anyway, so while developers attempted to push through this big upgrade on the Haleski testnet, they have a couple testnets with fun names, the chain ended up being split in two. And that basically means that the nodes didn't all get onto the upgrade at the right time and reach consensus together. So when that happened, the developers have been racing to fix it. They have not been able to get developers to reach consensus since then. And recently, Ethereum developers said, we don't actually think we're going to be able to get them to reach consensus until March 28th. And now, if you follow Ethereum at all, they were supposed to launch this upgrade on the 6th of March to mainnet. That is clearly not happening because testnet has been a bit of a disaster so far. It also sparked a bit of a debate around a lot of people in the Ethereum community. We said, hey, we should abandon this testnet because it broke. And some people have said, maybe not. It's like the longest running testnet we've had, has all this history. Then specific projects such as Lido came out and said, please don't get rid of this testnet. We rely on it and it will break a lot of our integrations. Generally, again, when you have a network as big and entrenched as Ethereum, changing little things can have really big impacts. So you got to make sure that you're very careful with any changes that you make before you do them. So we'll see what happens there. But again, after these failed test versions, the Petra update has, it launched on both the Haleski and Sepolia testnets. The Ethereum developers did decide to overall postpone the upgrade. It's most likely going to happen in April. And anyway, if you're wondering though, what the hell is in the Petra upgrade, I will tell you right now, it's got two important components. So the first is it's going to give crypto wallets some smart contract capabilities. So again, what does this mean? It means that maybe your wallet can execute transactions for you and kind of do more little things. And the idea is that they're essentially increasing the user experience of interacting with crypto via wallet. And if they do so, overall, that should increase the user experience and get to this end state that people are hoping for called account abstraction, where you don't necessarily know you're using crypto, you're just interfacing with an app directly. And there's a lot less kind of back and forth between wallet, signing, transactions, et cetera. And that would be a nice end state to get to because it would hopefully push towards mainstream adoption. The second component, a bit more technical in nature, is they also are increasing the maximum amount of ETH that one validator can have on the network from 32 ETH to 2,048 ETH. And so again, unfortunately, ETH has been one of the most disappointing assets in the market for several months. It should come as no surprise that the postponement of Petra led to quite a decline. It is now down 15.5% for the week. All right, next we're going to talk about StarkNet. So StarkNet is an Ethereum layer 2 network that uses ZK technology. They announced yesterday that they're pivoting their business to run an L2 on Bitcoin. So the network is still going to remain on Ethereum as well, but they're also going to be offering a scaling solution for Bitcoin that has more potential for StarkNet to diversify because it is a very crowded layer 2 space on Ethereum right now. So they're hoping that this will really push and get them that broad adoption that all L2s dream of. So they claim that, they have the most advanced zero knowledge proof tech and Stark proofs in this space, which are quantum resistance. So reminder for those who are not familiar, again, with kind of some of the scaling solutions out there, the main two ones right now for Ethereum are called optimistic rollups and zero knowledge proofs. So zero knowledge technology is actually considered more superior to optimistic rollups because it offers more privacy features and it takes up less space on the blockchain by using the proof or the cryptographic proofs that it uses takes up less space, and therefore it can be a faster alternative to optimistic rollups, also safer. So this pivot, so that's kind of where the industry is moving in the long term. So the pivot is also supported by Xverse, which is a very popular Bitcoin wallet, and they said that they will be supporting StarkNet's network on Bitcoin. And again, people are like, why do you need a layer 2 network on Bitcoin? What is there? So for a while now, if you've been, not really following the space super closely, Bitcoin as a non-EVM compatible chain. It means that it doesn't have smart contract capabilities the same way that other platforms like Ethereum, Solana, et cetera do. And so if you want to do anything on Bitcoin, there's very limited functionality besides send and receive your actual Bitcoin. And in the last 2 years, there's been a huge explosion of projects that have really wanted to take the liquidity that's on Bitcoin and use it in other stuff, apply DeFi protocols to Bitcoin. But in order to do that, you either need to change the core Bitcoin code, which a lot of developers are against because like Ethereum, it's a decentralized project, doesn't have built-in governance, or you need to introduce layer 2 networks that can do that for you. So StarkNet is going to be one of those that's in the race. There's quite a few others out there though, so we're going to see who wins. With this though, StarkNet, it popped immediately on the news, but it is now down 12% for the week. Okay, last up I got for you guys is Movement. So this week, smart contract platform Movement saw the full launch of their mainnet. So a beta version of their mainnet has been running since December, but it has only kind of produced empty transactions and blocks. So the full release of their mainnet means that users can deploy assets on chain and projects can permissionlessly deploy their dApps. So if you're wondering what Movement is, they're technically a layer 2 network built on top of Ethereum, but they use a different coding language that should be more developer friendly and also has a different kind of architecture than Solidity and other traditional smart contract languages do. The Move language has been used in a few different places, including Sui and Aptos. If you're familiar with it, it's actually the language that was created by the team that started to create the stablecoin project Libra or DM at Facebook many years ago, if you recall that. So Move is just another iteration, or Movement is another iteration of the Move language. They are just using Ethereum L1 as more base layer security. So great that they've gotten to this full mainnet launch. We shall see if they manage to grow their TVL and user base based on this. Also on top of that, the same day, Rex Shares and Osprey Funds filed an application for a Movement ETF with the SEC. So there's been a flurry of new ETF applications since the new administration came into power in the last couple months for individual crypto assets. Most of these aren't likely to be approved for some time, but it's good to see that folks are still trying to push the envelope forward on more assets available to the general public. Anyway, Move managed to buck the market trend. It's up 13% for the week. All right, you guys, I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.